Should I take QBI Safe Harbor deductions in TurboTax? Hi guys, welcome to our channel. Let's begin. The Qualified Business Income Safe Harbor deduction is a tax break designed for certain types of businesses, especially if you are involved in rental real estate. Whether you should take it depends on your business type and financial situation. The Qualified Business Income Deduction allows eligible businesses to deduct up to 20% of their qualified business income. The Safe Harbor rule specifically applies to rental real estate businesses to help them qualify for the QBI deduction. To claim Safe Harbor, you must perform 250 hours of rental services annually. You need to keep detailed records of time spent on these activities. You also require a signed statement of eligibility. You should consider to take Safe Harbor deduction if you have rental properties and want to simplify QBI qualification, if you meet the 250-hour service requirement, if you can provide the required documentation. You want to skip this if you are a reseller, freelancer, consultant, or service provider not dealing with rental real estate, or if your business easily qualifies for QBI without needing Safe Harbor. And that's it for this video. If you found it helpful, please make sure to hit the like button and subscribe for more videos like this.